What is good? Okay, so we're back here for another session. Um, yeah, just gonna have a little update as, uh, yeah, during Asia, I had serious prop fund, uh, account issues. It turned out, yeah, look, I was doing my prop firm challenge with the 5%ers, and yeah, fine print fucked me, guys, basically. Um, Look, it was a small account. It was only a 10K account that I was starting. My intention was to run two prop firm challenges at the same time, and hopefully, I was going to do the 5%ers and Hydra. Um, and yeah, so explicitly they outline on their website very clearly that it's 1 to 10 leverage on all accounts. Those are the exact words that they use. But it turns out that with gold specifically, the leverage is 1 to 3, which basically means that in order to trade 1%, to make a trade with the risk of 1% of your account, you're basically looking at a 50 pip stop loss. So for someone who's a scalper, um, yeah, look, it would never happen. So what I'm going to do is I'm just going to put that account on a copy trader and just let it be. Forget about it. Maybe check in a couple months, see how it goes. Yeah, there's no harm in just keeping it going. Um, but yeah, so what we're gonna do is we're gonna get initiated on the Hydra funding side. I'm just debating what size account we're gonna attempt for. There's about a $200 difference between a 50K account and a 100K account, and what I'm calculating is really whether or not I want to have two attempts, essentially, because that's what you get: two attempts at 50, or just commit to this 100K account. It's really yeah, really plausible that I'm going to be able to get through the 100K. I mean, it's a 10% max loss, which is, yeah, for the last couple months hasn't been what I've been doing at all. So I'm very confident that I'll be able to get through both challenges. First phase is only 6%, second phase 9%. Probably take me about a month and a half to get through that challenge. I kind of like the pressure of a 100K account. I think what I want to do is I want to have a smaller account that I'm trading, and then I just want to copy trade for the challenge. That way, I'm just seeing small numbers move around. I think it's really good for the psychology. Is that it's not so much about the numbers game, but more, yeah, just more about your process. It helps. It really helps, man. Disconnecting yourself entirely from the numbers and what they represent, what they mean, how heavy they make you feel, how light they make you feel, how excited they make you feel when you do well. So, yeah, let's just take a little look. See, the market's been doing all sorts of interesting stuff since I've been away. Um, yeah, that's not a chart, is it? Let's get the chart open. Right. So, let's just do a little recap here. This is Asia. And as we can see, we predicted that basically breaking above this level here was going to create a bit of a void and a bit of run on this liquidity. And look how quick that happened. So this is the second day that I've basically left on the third hour, and we've had these big moves come into the market on the third hour. So yeah, I mean, I made two good trades first thing in the morning. So I mean, there's always a good reason to leave for that, and then you can go check out the next market, which is what I decided to do. But yeah, there would have been some good opportunity here. We saw this double top bottom on the 50 EMA. We basically broke out of this candle out of the 1 hour high, which is showing us that this could be a trending market for Asia. We then created this consolidation, this tight consolidation here. And I'm going to guess that this thing pulled back to the point of control. Just going to throw a guess here. And there it is, point of control. So that would have been a really cool entry. Let's just make that thing look all right. That would have been a sweet entry. Hello. Let's get a yellow, yeah. What else did we do? We did create some fair value gaps along the way. Let's get them activated so we can see. We had created a nice fair value gap over here. We broke through this point of resistance. So let's just take a look at what I was looking at here. I think this was, yeah, this was this lower high of New York. So, you know, that ended up breaking through and turning from resistance into support quite nicely. So yeah, I think that would have been our entry point to take it up to at least to the 1 hour 200. We then had a nice move, continuation up there. Of course, Dixie's been moving quite significantly. But again, this is why this correlation indicator is just so good, people. Because look, this is the 1 hour 200. And that was pretty much the end of this move. This would have been a really juicy sell situation for me. We had the fair value gap created off this high here, and then we had this wick come up and test it. So that would have been a really easy, nice sell all the way down to the 21 moving. So yeah, I did miss a nice opportunity. As far as an opportunity here, let's see what was happening here in terms of people, buyers getting dicked, or if there's any foul play happening here. So we ended up making another run. We ended up swiping any buyers that were coming in here a little late. Created a strong fair value gap out of that. I mean, to basically reverse on that, plausible but unlikely. We pulled back to that fair value gap. That's definitely an entry criteria for me, is a big fair value gap created off a EMA bounce. But yeah, I mean, considering we had extended quite a bit already, the next layer of liquidity was, you know, would be all the way down there. So in order to really take out some buyers, price action would have had to move quite considerably. So during London, we had this deep retracement, which is, again, this is a setup. So this is double setup here from London Open. The first thing is that this thing had spiked up. Generally, when we're, you know, cruising quite far away from the 50 EMA on open, I like to take a trade back to the 50 EMA. It occurs again and again in the market. And we were just given a great opportunity to do that. So we had a change of character. So if we remained bullish, we probably would have, not had a very good day. So I guess let's just take a look here to see what sort of agendas and things we might have seen here. Well, we created this low here, and we definitely resisted that. We came back up, so bulls were getting in. We took out all of these bulls that were pre-market juicing up on this bull run here. So, you know, that was definitely a liquidity swipe. We could have played this up to the 21 daily. But yeah, I mean, that's a huge retracement. That retracement, you know, negated that whole big spike, like, instantly. I mean, let's just see what the pippage level was on the spike. I mean, this is a non-news situation. 100 pip move there. I mean, yeah, this is why I love gold, especially for scalping. Yeah, so we created these fair value gaps. We created a lower low, a lower high here. No real sellers, I would assume, getting in here, so there was no liquidity taken. Created a double bottom, went down for a triple bottom, created a nice impulse leg here, as well as breaking a sort of trend line down, and then we went and took out those buyers straight, and we've been on a bit of a downtrend ever since then. It looks like we're just slowing this trend down. And again, I mean, let's take a little zoom out here and see the bigger picture. But what did we expect? We expected there to be a lot of rangy action right here. And what's interesting to see is that this spike up here really failed to, make new highs and take out the sell side liquidity of Friday's move. So that is showing a lot of seller strength. And look, I mean, a lot of this is determined from this move, right? Dixie pulled back to the 1 hour 200, grabbed liquidity, and then totally just did one. Look at that, huh? I mean, that's definitely showing you where the fundamentals are based. The fundamentals are still bullish on the dollar for sure. And before they were looking at making new highs on this leg, let's take out all of these lows from the previous day. I think there was lows from even last week. Delicious, yeah. So it was running at that liquidity, gobbled all of that liquidity up, and decided that the 1 hour 200 was the resting place, the final pivot point for that move. I mean, how clean is that? That's why these EMAs, I mean, they definitely, the prime time to trade these EMAs is when we've had these long extensions and we know that, hey, look, this leg is really extended. A pullback is needed at some point. I mean, it's a very high probability trade that you can enter in on this pivot once you see weakness, break of structure, whatever it might be, and move your stop to zero pretty quickly. Just navigate how that move goes, you know. So that's a prime time trade for me, and happened to miss it. But yeah, plenty of opportunity in the market, so not a big deal. Not a big deal at all. So yeah, I wonder what we're gonna get up to here today. So that's prime time. Yeah, let's take a little look-see here. I'm just monitoring the stream, as you can see, guys, making sure things are flowing. Trade setups. Well, we're confirming a range. We've also confirming bearish sentiments, very strong bullish sentiments on the dollar today. Liquidity on the sell side's been well taken out and failed to take out the higher liquidity. Have we got buy side liquidity? Yesterday we gobbled it up. I mean, the next buy side liquidity is miles away. We're still closer to this sell side, so we could see another run up to that sell side liquidity. This is very much rangy sort of situations, but because there's a lot of spike and a lot of movement in the market, it doesn't necessarily equate to what I would deem a dead zone, which is a no trading environment. When these EMAs are tight together and they're like just glued, just don't want to be involved. Headache. But because we still got a lot of volatility, I'm still interested. Might not be a long trading session today. Again, right now I think I'm only going to be trading this good for nothing prop firm challenge. So we'll slap some small trades on, but it's definitely not worth me losing sleep on or spending too much energy on. I want to save my energy for the trades that matter. So if we get any good setups in, I'll jump in and just keep proving the process. Okay, let's just take a look at liquidity as we've come down here and see where obvious places might be. Okay, I mean, well, we've had this long leg down here. We did have a nice consolidation. We have some liquidity remaining up there. The 50 EMA, the 5-minute 200, the 15-minute has just been slashed. Dixie's pulling back. We've gobbled up any liquidity there. We might have this be resistance turn support, so we might be seeing a bounce right now and continuation. But to be honest, this move seems quite overextended. We have not had a consolidation or a pullback, and we've still got 45 minutes until New York Open. So yeah, I would assume that we're basically going to have a complex pullback here, consolidate and figure out what we're going to do for the New York Open. Any news that might be interesting here? Yeah. So I'm just going to take a look at my 10-second chart here and see how this trend's been behaving, because yeah, to trade in trend this is the guy. This is the guy to do that. Okay, so these are these equal lows. Clung, clung, clung. I would have been like, okay, this thing already wants to take this liquidity. We took this liquidity. The hour ended, so the hour ends. Nothing too much to reveal except manipulation, trying to control the narrative. Had this big old spike down here, made a new low, had some buyers step in, break the 9 EMA, came back up to 24, found support, resistance at the 24, again resistance, made our next leg, made made equal lows, and then we went up to our micro 50, made new lows, tested lows, great, broke through the 15-minute 200, which it doesn't have too much charge because I believe we've kind of taken out a lot of liquidities from Asia. Yeah, I mean these EMAs are getting smashed right now, so they're not going to prove to hold a lot of resistance or support, and we're just seeing that. So yeah, this is interesting. We had this move here. Some buyers could have been getting involved here, thinking that we might bounce off the 15 EMA, still holding this bullish sentiment. Let's see what, if any, like sellers have been just getting away with murder here. You know, anyone who sold and had their stops above this impulse here did well. Anyone who sold and had their stops above this impulse here, they haven't been checked. Excuse me. So we've had a lot of sellers just get away with the murder here, get away with the bank. You know, these guys should definitely be looking at taking profit roundabout now. I mean, this leg didn't have a pullback, and we pulled back to the 200 EMA. So I mean, this is the first major point, I would assume, of liquidity. Made another impulse, made a new low. It's at the 250. Right now we've got, you know, 50 EMA that's starting to possess a little bit of charge. It's been a minute since we tapped into it, and yeah, I mean that's a confluential area here. We swipe that out to continue lower. We're definitely in this complex pullback, and it's got a bit of an exponential sort of move occurring here. As you can see, we're getting kind of stuck in a wedge as well. So we've got this double top here, and we're starting to make higher lows. We've come off with a little lower high there. So this is a little bit of a compression zone. Interesting to see what might happen here. I think something that's interesting to be thinking out for me was like recognizing that really what my intention is to do with trading is to be an anti-retail trader, and that's really to understand what the wolves are doing and how they're getting involved, how they're getting their teeth in, how they're taking people out. You know, I recognize from like looking at charts, you can you know, suck your thumb and you can take a look at the chart and see all these amazing spots you could have got into to get in and make a whole bunch of money. But I think what's harder to really pull out of the charts is recognizing where people got fucked. And I think if you become really good at recognizing where these traders are trapped, you're going to become really good at holding down the market maker's narrative. And again, so with high frequency trading, which is really the age that we live in, we've got to recognize that really good returns for a high frequency trading system is going to be in the small percentile like returns a month, because, you know, that'd be an incredibly valuable system, even if you're only, you know, returning 5% a month or whatever on a high frequency trading. So let's think about that. If you're on a 5% return a month, and you are high frequency trading, i.e. you're making like 1,000 trades a day, that's a lot of losses. That's a lot of losses that you're making. So, you know, although these high frequency trading algorithms are all going to be doing pretty good in the long run, they all fucking up all the time. You know, they're just making more wins than they are making losses. The other thing is that with the high frequency traders, it's like the higher the frequency of your trading, the smaller your stops are, the quicker your decisions need to be. You know, so you're going to be able to see the logic behind these bots by being detailed at looking at the micro movement of these charts. You're gonna, you know, like these bots are not going to let price move below these pivot points. It's just fractal, isn't it? And there's two ways that one could be making decisions in the market, and you can be looking at the technical analysis to determine literally what you're doing is determining the value of something through technical analysis. Or you can have other means and measures of determining the value of something, and then looking at technical analysis to see that there's discrepancies between the actual value and what technical analysis is showing. Those are the two distinct ways in which that you can basically find your edge in the market. Now, a lot of these institutions are going to be having information sources that us retail guys aren't going to have. Like right in this moment, they definitely know, have a good idea of what is actually going on in these order books, on a wide scale between all these brokerages. And so they're going to know really what the sentiment is, Is gold bullish? Is the dollar bullish? Is it sustainable? We made just a big run, but are we just looking at trapping people? So we broke above the 15-minute 200 EMA. We found a lot of weakness. This is definitely the end of this run. We're going to find a little pullback. How high are we going to get? I think there would be no problems in taking a long here. There would be no problems in doing it, but we just want to see where buyers are already trapped in this reversal. So we've got definitely buyers that are getting trapped in here. We had a change of character here, so peeps would have been looking to get in on the lower high of the change of character. So our ideal situation to be entering in a reversal here is just watching guys get taken out on the lower high and then entering. We've created a very nice narrative here. We've now had another BOS showing that this change of character is now being confirmed, that we are in a pullback of this long move down. But yeah, let's just see where the liquidity is. Would there have been eager traders trying to sell at this point? Probably. And again, I think this other thing to recognize with high frequency trading is that these algorithms, for the most part, are going to be using logic. They're going to be using chart data to make their decisions. So just like the retail traders, they're going to be influenced by what we are seeing. So I think what I'm doing essentially is just navigating the narrative that basically creates a sort of fear within the trader that they're battling like the AI robot that's going to just completely that they can't fight, that they can't win a battle against because the intelligence is just too strong. So this is interesting. So we made this breakout here, and then the breakout is now just being rejected. So that's definitely showing me some institutional sort of intervention. Look, we're making this high now, so that would definitely show longs. Have there been any longs? Look, to be honest, this is a juicy pool of liquidity. We've got 50 EMA, the 200 EMA, we've got this liquidity above. So what we might look to do here is induce the continuation reversal here, come grab some liquidity, and then go back up and take out the sellers that got involved there. I like that play. I like that narrative. I like that gangster lean. Gotta get that protein in, people. Yeah, I think definitely been struggling to keep my mental game strong over the last few days, being a little sickly and not feeling 100%. And I've definitely traded in those environments, man. And when you're not 100%, you just need to stick your head out of the market, man. Just go get better, go rest, go sort yourself out, because you'll do more damage. You need to be on your A game in this war field. It's like you wouldn't go have a duel, with a bit of flu if your life depended on it. Lower high rejection of the 50-minute 200. Let's just see what 5-minute candles and stuff are saying here. Whoa. made all that noise on my other chart, so I'll just kind of draw them back in here. To be honest, we'll just keep it simple anyway. That's the main move that we're concerned with. Yeah, got some trap buyers in here. Yeah, creating a nice seller's narrative here. That's where I think this liquidity is, and it's also like there on the 15-minute. So. I like this candle for inducing more sellers, creating more liquidity above this move. So engulfing right now on the 5-minute. We've got 1 minute for this candle close. Are we going to reach below this low here? That's the low that created that 5-minute candle there. Still got a minute left on this candle. That's a really nice entry if you're looking to continue. How confident am I that this liquidity, that this move will not continue without grabbing that liquidity? Well, Dixie's running away with things. Dixie breaks his high. It's going to be quite hard for gold to go get that liquidity. This is definitely, yeah, correlated to Dixie right now. Let's see if I can. Yeah, I'm gonna put Dixie here so we can keep eyes on it. And then I'll just have to move my camera position. I guess that's gonna have to do. It's not bad. See a little bit of Dixie action. Oh shit, let's not do that. It's kind of interesting. Just rock that for a minute anyway. Dixie's making those new highs. We want to see a rejection of these highs before market open. So there's liquidity bad on all fronts. So like I say, Dixie starts smashing this level. It's gonna be hard to come back up here and grab the liquidity above. I like, like I say, with our narrative here, that this is showing, tiredness on this pullback, definitely roping in some sellers here. But right now, this whole little section here is really the money pool that I'm interested in getting short in. So anyway, in there, if I start seeing weakness, I'm very happy to get in. But yeah, we just need to see a second retracement here on Dixie. What the? Yeah, I think that's pretty cool. I can see my 5-minute candles up here. You guys can see them too. And then we can check out what Dixie's doing. So this is this other indicator I made, which basically just gives me a very simple view of Dixie on an EMA basis. And then we've got our TDI, and our TDI is interesting. Look at that. So we just we had our rejection here, where it's obvious that the sellers are in control, and we've had a pivot point at the 50 on the RSI. So we those are strong signals right there for sure. Still not buying it. I want to see people getting dicked before I'm getting in. Dixie failing to break through. We still got 25 minutes to the open, so but yeah, I do like trading pre-market because there's some, the market kind of fatigues and then just kind of goes to obvious places, behaves in obvious ways. Right now, the obvious move for me so much is to grab that liquidity. I like to see this consolidation here, creating more reason for peeps to get on long on this reversal. So this might be a double entry here. Wick out, take a buy, ride it up to this liquidity and sell. I mean, that would just be the prime time setup here. I like this liquidity pool that's being created underneath this 5-minute candles here. Again, the second time we're finding resistance on Dixie. So boom, moving up towards the liquidity. Let's see if we create an FVG gap that might be worth getting in on to ride it up there. Let's see. Okay, that candle's finished instantly. A bit of an FVG, I like that FVG. Boom. We're in here. I'm gonna get an entrance in. We come back lower, ride it up to this area. We're gonna grab this liquidity before the open for sure. Okay, price is filling this wick up nicely, showing continued push. Let's see how this candle closes. I like this. This is kind of bullish sentiment here. It's getting hit. We're not